Welcome to the Cryptosphere. This is Cryptogenic coming at you. Today is Tuesday, August 16th at 5:07 p.m. here in Northern California. It is hot outside. I mean, it is hot outside. It was 111 degrees when I picked my daughter up from school today, and it's 107. So we're staying inside, staying cool. We're going to take a look at this crypto market today. But before we jump into the charts, I was listening to a podcast called Planet Money today. And I was scrolling through their content to see what they had to say about crypto. And last month, I believe it was, they had an episode called 2 Crypto Crash Indicators or something like that. And I gave it a listen, and they kept talking about how risky this asset is, and it's just interesting to me. I mean, they had one person on there who had something good to say about crypto, one lady towards the end, but they couched that between a whole bunch of negative stuff, basically, and negative people. And I thought to myself, and they kept harping on the fact that, crypto has experienced a 70+% pullback. It's in the toilet. Lots of people have lost thousands and thousands and thousands of dollars. And I thought to myself, they always do this. The mainstream media, they always do this. At the very place at which it would be profitable in the long term for the average person to buy, they call it a hill of dung. But now watch what happens. Once it breaks 100,000, they're going to be doing episodes talking about crypto is the greatest thing since sliced bread, and everybody should have some in their portfolio. It's almost like, and that's what they did when Bitcoin was up at 64, 65, 67,000. When it broke 50,000, even the naysayers were like, yeah, maybe everybody should buy some. We should all buy some. We should buy some. All of a sudden, they become bullish on it when it's already made a huge bullish move. The crazy thing to me is that how many times has the stock market crashed in the last 100 years? But how many times did the stock market crash and the mainstream media start saying, see, that's why we need to stay out of the stock market because it's risky. And, it's so many people have lost. I guarantee you more people have lost money in the stock market this year than in the crypto market. More money has been lost in this 30% stock market pullback than has been lost in this 70 to 90% crypto pullback. I guarantee it. So, it's really, really interesting that there's so much invested. And, honestly, what I think is behind it is I have a different perspective on government regulations of crypto. I think most of us are scared of government regulations because we think government regulations are going to disrupt crypto and make it more difficult for us to invest in crypto. I think the U.S. government could have regulated crypto a long time ago, but they haven't done it. Why? I don't think the U.S. government has any interest in putting out clear crypto regulations because it's a zero-sum game. It's actually a lose-lose for the U.S. government because think about it. You put out regulations that like crash the market, and now you get the outcry from citizens who are invested in the market. The U.S. government basically becomes the enemy, specifically when you stop and think that of the nearly $1 trillion invested in crypto, the majority of that money is institutional. So now you have these financial institutions that have a bone to pick with the U.S. government because the U.S. government just crashed its asset, basically. But then if they put out regulations that make it easy to invest in crypto, that are pro-crypto, that are crypto-friendly, you're going to see crypto go from a $1 trillion market cap to a $10 trillion market cap and beyond within the next 3 to 5 years, 3 to 7 years maybe. I mean, it'll easily happen. And that is definitely a lose-lose because when you're talking about a government, what are two powers that every government must retain in order to be a government? Those two powers are the power to take lives or to kill, and the power to make money, to create money. And so if they just let any Joe Blow come in and create his own money, they're not the government. So any sovereign government maintains the right to create its own money. Crypto has disrupted that. And in that sense, crypto is a disruption to government as a whole. And so, there's a lot of institutions that are waiting for clear guidelines from the U.S. government before they enter into the crypto waters. And so even if those guidelines are tough on crypto, as long as they're clear, you're going to have just this tsunami of institutional cash coming into crypto because suddenly it will be safe. They will know the specific rules by which to enter into the waters. I think the thing that troubles me is that the government is afraid of corporations, of institutions. The government is not afraid of us. The government's not afraid of us. And so whatever those regulations are, they're going to make it much easier for institutions to profit from crypto than individuals like us. And so with that being said, I think we're in a window. We're in a window. And, things are happening very slowly. A lot of people are talking about, 70% crash. But look at this. Take a look at this Ethereum chart. Secretly, quietly behind the scenes, in the last 57 days, Ethereum has done 133%. I mean, take a look at this T-Fuel chart, right? Quietly, behind the scenes, in 58 days, T-Fuel did 118%, right? Take a look at this Theta token chart, right? Quietly, behind the scenes, in 56 days, Theta token did 80%, right? Take a look at this Chiliz chart. Chiliz is really the winner right now, at least in terms of what I've seen so far. 195% in 58 days. I mean, that's pretty crazy, right? It's not bad at all. Look at Matic. Matic has done very well as well. Matic is the winner. 236% in 57 days. So, we talk about this being a crypto winter, and yes, okay, it is a bear market. I will give you that. That's true. And matter of fact, what we're going to see in these charts is I think we're going to see another pullback, another market-wide pullback. That's to be expected in this season. It's very volatile. But in the midst of that, I mean, what do you call a 236% move? I mean, that's, in the stock market, that would be called a bull market. Now, of course, when you look at the Bitcoin chart, it's another story. And this is really all the mainstream media cares about, is that if you look at the swing low to the swing high for Bitcoin, it's only 21.91%. So Bitcoin comparatively has done next to nothing. But we still look at Bitcoin. I still major in Bitcoin technical analysis because what Bitcoin does is indicative of where the market is going to go. However, with that being said, I want to really focus in on Ethereum today. This Ethereum chart, I've been poring over it. When Ethereum broke beneath $100, I was like, $1,000. I was like, man, this is a steal. This is an absolute steal. And I remember seeing it, and it was like $900. It was in this wick somewhere, like $930. I was like, dang, man, I got to buy that. I got to buy it. And I didn't buy it. Just didn't have the opportunity at that moment to buy any. Nevertheless, I didn't buy it. And sure enough, boom, 131% in 57 days. Not bad, not bad, not bad. So the question is, where is Ethereum going next? And I think we can extrapolate from here, from this chart, what is getting ready to happen in the market. What I want to do is hide these drawings for a second, because I just want to look at this chart. Now, you all know that my methodology for technical analysis is simply to observe convergence and divergence dynamics between the price action and the RSI. That is the heart of my methodology for technical analysis. Now, really, there's 4 different things I look for, 4 different types of divergences that I look for. I look for classic bearish divergence. I look for hidden bearish divergence. I look for classic bullish divergence. And I look for hidden bearish divergence. So, the differences between the highs and the lows. Any divergence in the lows is always bullish. If you're making higher lows in the price but lower lows in the RSI, that's called hidden bullish divergence. If you're making lower lows in the price but higher lows in the RSI, that's classic bullish divergence. So if there's a divergence in the lows, it's bullish. But any divergence in the highs is bearish. Okay? So if you're making higher highs, let's say, in the price and lower highs in the RSI, that's classic bearish divergence. But if you're making lower highs in the price action, higher highs in the RSI, that's hidden bearish divergence. So anytime there's a divergence in the highs, it's bearish. That's really all you need to know. Now, let's start from this high here to our current high here. It's flat, right? It's actually slightly higher. You can see, because if I put a line through this where it sits, it's slightly above that line there, okay? Slightly higher, but it's pretty much flat. Now, if I draw a line from the corresponding high in the RSI to the corresponding high in the RSI, do you see the divergence? It's huge. That is hidden bearish divergence. And it's strong hidden bearish divergence. It's not minor, minimal, weak. It's strong bearish divergence. Now, what that indicates to me, and we've been seeing it for some time. I mean, think about it. From this high, where did the bearish divergence start? Here. Really as early as here, actually. Yeah. Here's the beginning of the bearish divergence, July 7th. So from July 7th, you could already see bearish divergence on this chart. Look at that. Hidden bearish divergence. Strong hidden bearish divergence. Which means that this chart, all the way back to July 7th, has been telegraphing the bearish move that it's going to make. This chart has been telling us. Now, in addition to that hidden bearish divergence, we see these two candle patterns. We see these two candle patterns are the same. You have an ascending narrowing wedge, which tends to break bearish. What do? We broke bullish above it. That happens. But we immediately formed another ascending narrowing wedge. Okay? Now, the thing about these indicators in the chart is that what they don't indicate is time. We could actually keep moving up in this narrowing wedge all the way to the end of the month. What we see is the RSI flattening, but it's still an ascending narrowing wedge, but the price action is still moving up. So the RSI keeps bouncing off of the overbought position, and the hidden bearish divergence is becoming even more localized and more pronounced. So we could see this on so many levels. For instance, from this high to this high. Clearly a higher high, right? But from this high to the corresponding high is clearly a lower high. So that is a localized hidden bearish divergence. Okay? Now we did make a higher high in the price here, just as we made a higher high in the price here. But all we're doing is moving steeply up into this ascending, narrowing wedge. So what that suggests to me is I think we're going to break down bearish out of this wedge and at least come back to test this line. Okay? And if we break beneath this line, here's the next line of support. And really, another way to look at this is simply to see more of a macro picture. If we make this the primary trend, you see that we hit the top, then we hit the bottom, we hit the top. This would be the bottom again, somewhere around the 1300 mark. So that kind of gives you an indication of what I'm looking at in the market. Now, if we look at the total crypto market cap chart here, we're seeing the same type of deal moving upward into this ascending narrowing wedge. You see how it's narrowing, but now it looks like we're trying to break bearish out of that wedge, just like we've broken bearish out of it in the RSI. Notice the RSI, we started getting diminishing returns and it nearly flattened here. That's a sign that the RSI is topping out and is going to begin to downtrend. If the RSI is going to begin to downtrend, that means the price is going to begin to downtrend. And that means that the first line of support is the bottom of this channel here. We could even draw it like this, just like we did with Ethereum. So we've got a line of support here, we got a line of support here, and we got a line of support here. So market-wide, I'm expecting a little bit of a pullback here. And, you know, the fact that I'm expecting a pullback here is actually indicative of the fact that the market has done pretty good, right? Now, here's another perspective. This is the Ethereum 4-hour chart. Another perspective, if we bounce at this line, we're going to take another swipe at the top of this channel. So if we bounce anywhere between this line, which is about 1842 and 1790, we're definitely going to take another swipe at the top of this, trend. Now, what we could see is diminishing returns, which means taking another swipe at the top, but not necessarily making it. And even do that for a while before we break down. We know not the day nor the hour, but the chart is screaming breakdown to me, folks. And that's a good thing. That's a good thing. It's simple. It's not like crash breakdown. It's just rest breakdown. And I think going into Ethereum 2.0 next month, with the whole transition from proof of work to proof of stake, I think this cool-off period will be a base. And once the official word of 2.0 is released, the date and so forth, I think Ethereum will have come down maybe to one of these levels, maybe even slightly below, and then it'll just take off. I think it'll just take off. So I'm expecting some bullish action between now and the end of the year, but I think we've got at least one more capitulation before that comes. What I've been looking at as well is this Bitcoin chart. We're seeing diminishing volume. I'm expecting the big money to be waiting at the bottom, and we haven't seen any big money yet. So I'm expecting one more swipe at the bottom. And what would be cool is if we come back down to the same level and retap that line but make a higher low in the RSI. That would be classic bullish divergence. And that would be a strong indicator to us that the bottom is in and that the market is going to move up now and that it's a sustainable move. All right, folks, that's all I got for you today. Listen, keep your heads up. Keep your heads up. Don't be discouraged. All is well. You know, I've been meditating. My dad sent me a text message yesterday, and it was Psalm chapter 37, verse 3 through 7. And it said, "Trust in the Lord and do good. Dwell in the land and feed on his faithfulness. And do not fret because of evildoers. Do not fret because of he who prospers in the way. Commit your way to the Lord. Trust also in him, and he will do this. He will make your righteousness to shine forth as the sun, the justice of your cause like the noonday sun." And then it says, rest in the Lord. Quiet yourself before the Lord. Be still. Wait on him. And, it's so easy to be anxious. So easy to look at stuff in your life and feel like this just needs to happen right now. No, nothing needs to happen right now. All is well. Just quiet your heart before the Lord. And, my prayer for each and every one of you is that the joy of the Lord would be your strength and that his favor would be your shield. All right, my friends, that's all I got for you today. Do me a favor and hit that like button, hit that subscribe button, leave me a comment letting me know what you think. But above all else, make it your aim to sleep in peace every night, wake in joy every morning, and walk in love every day. This is Cryptogenic, signing out.